Now, once again, financial markets are focusing on politics. By the end of Monday, 3 of the fiscally fraught 4 countries saw the leadership structures break down in a span of just 4 days. The political uncertainty led to high volatility in global markets. Now, the UK's deputy prime minister stepped down on Friday. Japan's leader announced his resignation on Sunday. France's prime minister lost a confidence vote on Monday. Now, the US is the 4th member of the group, which is battling a high level of debt. The political chaos and rising debt levels has sparked uncertainty. As a result, investors have forced global long-term bond yields higher. That makes it even tougher for governments to wrestle back control of their already strained public finances. On Monday, the French parliament voted to bring down the government because of its proposals to rein in the country's soaring national debt. That decision depends on political crisis. Now, President Emmanuel Macron must pick a 5th prime minister in under 2 years. Only 9 months have passed since François Bayrou became the prime minister. Now, with Bayrou gone, Macron is left with fewer choices. According to Bloomberg, French debt is rising by 5,000 euros, and that's about $5,840 a second. Despite that, the arrival of another weak administration will likely find it hard to pass a meaningful budget. Now, moves in financial markets reflected those worries about France's political and debt problems. France's yield premium over Germany has climbed to levels last seen in January. The 30-year yield spiked to its highest since 2011. The 10-year yield has long surpassed those of Spain, Greece, and Portugal, and countries once at the nexus of the Eurozone debt crisis. In Japan, meanwhile, the yen slipped and 30 bond yields rose. The speculation is whoever replaces Shigeru Ishiba will be more relaxed about fiscal policy, and that means the Bank of Japan has less room to raise interest rates and signaled another shift in policy. Now, as a result, volatility was expected to remain elevated across yen, bonds, and Japanese stocks. As for the UK, markets took the departure of Angela Rayner in their stride. However, investors remain focused on Prime Minister Keir Starmer's ability to run the country. They will also eye Starmer's efforts to come up with new spending cuts or tax hikes as the November budget nears. At one point last week, Britain's cost of borrowing for 30 years hit the highest since 1998. And so the political flux and rising debt levels are weighing on investor sentiment.